Hey, what's going on, guys? Bob Mentality here. Today I want to bring you a video just discussing a little bit of SPY technical analysis. We're going to look at the QQQs as well, and we're going to talk about the big picture bullish trend that we've been seeing since December of last year, and also the impending the bearish move that I see so many people looking for. And consistently it's been denied again and again and again. So I just want to talk about both sides and what my approach to the market's going to be here in this upcoming week and moving forward, as I think there is going to be a lot of opportunity to capitalize on. It's just going to be important to keep in mind the market sentiment, and that's what I want to talk about today. So before I jump into just the pure technicals, I want to talk about how what's been really going on this year as a whole. As you know, the SPY ran from 230 to 300, right? The majority of this move could be attributed to trade optimism on making a deal with China. Whenever Trump tweets, the market goes up. When he says the trade deal negotiations are going well, and whenever he tweets that there's issues or he's going to increase the tariffs with China, etc., the market goes down. There's a completely linear correlation there, right? A direct correlation with how Trump's approaching the trade deal, what's actually happening, and the market, the overall market price. So there's been a huge influence of that. So the couple of the points of the things that developed recently, just a week ago when we had the G20 meeting, was the main point I want to talk about was that Trump decided to allow U.S. companies to sell to the tech giant Huawei again, which is positive, right? So initially Trump had a ban on that company because he was worried about them spying on the United States, and he had a ban on trade with that company. Well, the market didn't like that very much, and so we saw a bearish reaction to that, right? Now, China definitely didn't like that, as it's going to hurt their economy as well. And so one of the demands they made during the G20 meeting, when Trump talked with President, I think Xi, I'm not sure how to pronounce it, essentially that what they demanded was they demanded that we would allow trade with Huawei again, which was a major bargaining chip. I feel like Trump just gave up. That he should have held on to that, and if anything, held on to his bargaining chips and used them to make this deal happen. So what happened was during the meeting just last week, the conclusion Trump came to was, okay, we're going to allow trade again. So that bargaining chip's off the table, right? Another thing that happened was China requested that Trump would not impose another tax on the $300 billion worth of Chinese goods. And Trump also agreed to that as well. So he didn't completely take it off the table, but he agreed he's not going to move forward with that right now because they want to make this trade deal happen. And so I feel like that's another bargaining chip that was taken off the table. So where does that leave us? It seems like Beijing isn't pressured to make this trade deal happen right now. That's what it seems like. The pressure's off because we're not going to increase the pain more because of tariffs, right? And we backed up on we reversed the Huawei decision. So it seems like now they're kind of just cooling it, right? If they don't get a deal that specifically favors them, it seems like they're content to just kind of wait, right? Maybe someone else will come in office and give a better deal to China, right? So those are the points I wanted to talk about. It seems like we're almost in a stalemate because what happened also, and you can go read articles about this, is pretty much Trump said, hey, or China said that if we don't remove all tariffs, the deal's not going to happen. And Trump was like, hey, I'm not going to remove all tariffs, right? So in addition to not putting a ban on or to not increasing including and starting another tariff on the additional 300 billion worth of goods, including that, China wants Trump to back up on all the tariffs that Trump has put in against China. And that just seems highly unlikely, which I'm pretty sure everyone agrees with that. So where that leaves us now is we're sitting here at all-time highs in the SPY, on the QQQ. Stocks are all looking fantastic. And it doesn't seem like the main reason why this entire move occurred is going to actually happen. That's what people are worried about, So let's just jump into the technicals. Now that I went over the main fundamental points that I've been focused on in regards to the trade deal. So let me go to the 5-day first so I can show you what happened. So this day, after we initially broke the all-time highs here, and it looked like we were going to rip through 300, here on Friday, the market saw a ton of weakness into the open because that's when the article came out that essentially said that that Trump was not going to remove, all tariffs to make the deal happen. And then, Beijing said, well, if you don't remove all the tariffs, then we're not going to do the deal anyway. So the market was like, oh, well, this isn't going to happen. And we pulled back. However, look how quickly this dip was bought up. That's an extremely strong sign. You would think at all-time highs, we'd be ready just to turn around and collapse. But everything was bought back up. So now we can begin to form another, either a gap up and go ahead and rip the highs, or consolidate for a little while for a curl to break out over that level. So big picture, if you go to the 180-day, we've been uptrending. Like looking at this chart, what makes you want to short over a long period of time? A lot of people wouldn't be excited to do that. There's not going to be as much room. Like you might have some, down to here, but you just might as well consolidate over the previous highs and then break out over 300, right? Because that seems likely. So when you look at it like this, it doesn't look as appealing anymore to get in there for the short. When you zoom in like that, when you zoom out, you can see how far we are from the beginning of this year off of these lows, and it looks like the deal's not going to happen. So as far the bearish perspective is taking a look at this and saying, we're overextended to the upside. Every single time we touch all-time highs, we see, let me zoom out a little bit more. Whenever we touch all-time highs, like boom here, we saw a significant downside move following that. We pushed back up to it, and within 5 weeks of hitting all-time high and consolidating, we saw a significant dump all the way back down. And then we finally, we made it all the way back up here to all-time highs. And again, we saw a significant pullback, right? So this is extremely important to recognize, because look at the consolidation times here, guys. Between this high and this high, look at how long we consolidated to break that. Between this high and this high, look at the length of consolidation between those. And now look, we saw a brief pullback and then ripped right back up. So the move is getting increasingly stronger and faster as we're approaching this point, right? And we're seeing these huge wicks leading up into that break. So we just recently broke all-time highs. We broke over the all-time highs, gapped up, tried to dip, and then we just yanked back up. I think that SPY really does want the 300 price level, and it seems like if this price action keeps up, we're going to rip that. I don't think it'll take much. We're only about, what, 2 points away. Anything could happen. We could see a bullish Trump tweet or etc., and we could immediately just rip up through that 300. Now, as far from a bullish perspective, yes, this recent dip down here to 296 was very quickly bought right back up. But where are we gonna go from here after that? We could just be forming a lower high to curl back down. And remember, the train always turns around and heads back down a lot faster than it comes back up. So a lot of people are waiting to see that. And since we're seeing these shorter consolidation periods and the momentum speeding up, it's looking more and more appealing to get into that short position and just take a 2-3 months long short and committing to that. So here's my advice as far that goes towards the bears and what my bearish plan is looking at this. I didn't want to even get puts until we're over 300 SPY. That's what I was looking at. And once we're over 300 SPY, I want to see a fundamental bearish catalyst that's going to help us. I'm not worried about missing out on a few points on the SPY. So if let's say we rip 300 and go to 302, 305, and then we go back to 299 in a day, I'm not worried about getting in at the top. I don't think the edge is going to be getting in on the top on the short side. As you can see, so many people thought the top was in. When we turned around here from breaking all-time highs there at 95 and started pulling back, people piled in short, and they're all underwater right now if they didn't stop out. So I'm not interested in trying to time the top. What I'm looking for is the trade deal to fall through or to be significantly postponed and etc. in order to get in some puts on the SPY. I do want to see a climax over 300 because that's going to be that super that blue sky breakout everyone's looking for. That's a price target. The market's at all-time highs. That's when I would look to start looking to scale into a short side position, anticipating that we do see that breakdown. But we need to be over 300, and I do want to see some fundamental weakness enter the market. That will help the bears, that will help the trend start to reverse, and we start seeing heavy profit taking over the next couple of weeks. That's what I'm looking for. When do I expect that to happen? I'm expecting to see a significant pullback. Honestly, probably within 30 days. Given how quickly we move from the 270s up to 300, I'm definitely expecting a retracement. If we can rip through this to 305, over 300, I'm looking at picking up, some of the 290s on the put side, the 280s, the 270s, and just kind of, scale out over time, right? For example, if we're at 300 and you get the 290s, give them a month, right? Or 2 months. And then after 2 weeks go by, go ahead and get the 280s, the 270s. And those are 3 more months out consecutively. What I'm seeing a lot of people doing is jumping in short here at 299, saying we're not going to break 300. And they're buying weekly contracts that expire in, 7 days, or 2 weeks. And the issue with that is they're getting absolutely killed by theta, and they're getting killed by this continued bullishness. If we jump over to the VIX, look at the VIX over the past, couple weeks, guys. We were up here at 23, and we're consistently getting hammered. The market's just not afraid right now. We need to see some kind of significant bearish catalyst that's going to increase fear in the market, and that's going to turn us back around. We need to see momentum. We want VIX over 15 to get some serious downside moves. What's happening is during this choppy consolidation, people are piling in short, and then they're getting wrecked on their puts. I would not be buying 7-day expiration puts, looking for that SPY to turn around. Why? Because look at the trend, guys. Overall, we've been uptrending. So yes, I think we're overextended to the upside, but are we not? So for example, we're overextended here at 298. Were we not overextended at 280? Right? When you look back, were we not overextended at 280 here? Given the lack of fundamental change in the news, we definitely were extended at 280. So I would not be looking to call a top on the market, and make sure you always control your risk when you're getting into these shorts. I wouldn't just look at 300 and all in, piled in short. Look to scale in based off a trade plan over time, because it's going to take a little while for this thing to turn around, unless we get some kind of bearish catalyst, which is what I'm going to be keeping an eye out for. So that's my bear perspective. From a bull perspective, guys, it's been buy the dip, and it's always been buy the dip, especially since we reversed here off the 275. Again, we saw that bearish news. We saw that bearish news here on the 299. We saw that pullback and the bounce, and then a move back up to the 298. So let me just fix this window here. So it's always been buy the dip, and it continues to be buy the dip. And as long as the VIX is sitting there at like 12, it's going to continue to be buy the dip. So the bulls already are doing what they're doing to make money, and the bulls are consistently making money. Meanwhile, the people who are piling in short, trying to top the market, are getting destroyed. So there's my take on the SPY. One more thing I want to point out to you guys here on the daily is look at the bearish divergence here on the RSI. So you see we made a higher high here, and then we're making a lower high on the RSI. Now look, that's a difference between what? 74 and 67, right? So you're looking at about 7 points there. Now, what I want you to look at is look at the difference between the SPY and the QQQ as far as the bearish divergence, right? So look over here. That's a difference between 82 and 65. So that's pretty huge, right? And the QQQ hasn't quite broken out as much as the SPY. So there's a heavy bearish divergence here coming up in the market. I think we could see the QQQ down on the 185 pretty quick. Very, very quick. Even the 180s could get pretty quick if the SPY starts to turn around and head back to the 270s, right? Maybe even 260s. I don't think anyone really believes this trade deal is going to happen. It's just not. It just doesn't seem likely. However, that hasn't stopped the market yet. So basically, I'm saying be careful on the short side, guys. So we're at 14 minutes here. I'm going to go ahead and wrap this one up. That's pretty much what I wanted to point out to you guys was we need to see improvement on the VIX. Be careful with your short side because the bulls have been winning recently. However, do not rule out the market's essentially up on fluff, it seems like. So I'm gonna get out of here, guys. If you have any questions, leave a comment in the comment section below. If you're interested in joining my private Discord, which is just a community focused on adding positivity and working together to consistently pull money from the markets, I have information for that on my Patreon. And you can hit me up on Twitter. You can shoot me an email. Again, leave a comment if you want to reach out to me. If you have any questions, I'll definitely get back with you guys. Seriously, I am here to help. And that's all, guys. So remember to stay focused and continue to develop that bot mentality, which is a trading mentality, which is learning to control your emotions so you can trade like a machine, guys. I'm out of here. Deuces.